Bloomberg Audio Studios. Podcasts, radio, news.
Single best idea on the most interesting day, a shutdown day. Thank you, Nathan Hager, and all in Washington. Thank you, Nathan Dean of Bloomberg Intelligence, for perspective. Joe Matthew in the 9 o'clock hour. It's amazing the sources he has to pull into his balance of power. David Gura, wonderful, in the 8 o'clock hour, giving us perspective. Looked a big take for their treatment of this shutdown. In the 7 o'clock hour, Henrietta Treyz was with us as well, wired in to Capitol Hill here from Veda Partners. Henrietta Treyz.
I think that this shutdown was inevitable. It didn't happen in March. It happened this time around. Yeah. And if it didn't happen now, it was going to happen in November. We are at a very real impasse in the United States. It is as tense as I've ever seen it. You're seeing a lot of good members leave and retire and resign because of the acrimony. So this shutdown maybe could let some air out of the room. If there's going to be a positive benefit, maybe it could be that.
Henrietta Treyz there, and I have no idea, folks, in the compendium of voices that we spoke to or we researched, I can't give you a timeline. It could be tomorrow. It could be 2 months from now. The single statistic I saw that stopped me in my tracks, thank you, the Washington Post, is Social Security will not be shut down, but 88% of Social Security employees will work without a paycheck. That is the famous TV show said, this does not compute. I don't understand how that happens. We spoke to Aakash Doshi of State Street about gold, really, really informed about the supply dynamics, the demand dynamics, the general equilibrium, the oddities of global gold. Here from State Street, Aakash Doshi.
I think the price level can sustain, and that we're knocking on 4,000 an ounce, and we're going to clear that level in the fourth quarter. I just don't think the volatility or the violence of this move higher is likely sustainable. So I do think there's a bit of FOMO that we often see in tech stocks emanating in gold right now, and I think eventually will calm. Gold performs differently than other commodities. Typically, when you have a supply shock in oil or corn, supply is going down, and that's why prices are going up. In gold, the price discovery function is usually a shift out of the aggregate demand curve. So supply can be at a record level just as demand is growing at a faster pace. However, there are two components of gold supply. There's mine production, but there's also gold recycling or gold scrap.
That's what
you see in a lot of
Mateo
metals. So within that context, actually gold scrap has been lagging on supply growth this year, despite record high prices across currencies. So what I would say in that regard is that a lot of consumers globally, including in India and China, are just holding on to gold and also hoarding gold. And that's buttressing this rally, even as mine production is growing.
Aakash Doshi with State Street. Really, really interesting conversation. As he mentioned there, the acceleration of gold. How do I translate that technically? I go back to the chart of Dennis Gartman, gold and yen, and I'll take it on the y-axis to a logarithm, which shows the percentage change. It's a very different set of information than a normal moonshot chart. And the answer is, even going to logs, gold has accelerated. Our podcasts, we're out there on Spotify, on Apple, and of course on YouTube podcasts. It's Single Best Idea.